I'm Jason Stitt from Morningstar. We got the government payroll report for the month of October on Friday. It showed 171,000 jobs were added to the economy. This is better than most economists' expectations, but more in line with our own experts here at Morningstar. I'm checking in with them today at Bob Johnson, our Director of Economic Analysis, and Vishnu Lekraj, who's an equity analyst covering the employment sector. They're going to give me their insights on that report. Thanks for joining me, guys.
Thank you.
Great to be here.
First of all, congratulations. You both thought that we would come in above consensus, and we did, in fact, come in pretty far above consensus with that 171,000 jobs added. That included 184,000 private sector jobs. Government subtracted a little bit. Vishnu, your take on that top line number?
Excellent. So we're getting closer to more of a normalized recovery level. I know I say that a lot, but we are inching towards that number of about 200 to 250 on the private sector level, which is what we need. And when you take a look at the report, again, there wasn't any huge weakness. There were some categories that were flat, but most categories were slightly positive to very positive.
Bob, not only this number looked good, but they also revised prior months, in some cases pretty significantly.
Yeah.
What do those revisions say? How big were they?
Well, you know, the revisions have been large, and they have been for a while. And when you get an improving economy, that's what tends to happen. You revise the past numbers up. When you're in a declining economy, it kind of works the other way around. And so there are things that get missed, and as you actually count the numbers, it does a little bit better than trend. That's why this happens. So it's not atypical. But one of the ones that's interesting to highlight is the August report, which is always a terrible report, and we always have egg on our face because we're usually fairly optimistic on it. The numbers usually turn out pretty crappy. And there was like 96,000 jobs added in August in the original report. That number has now been revised twice in two steps of about 50,000 each. And now the August report says we added 192,000 jobs during the month of August. So that's why you've got to be so careful looking at the month-to-month numbers. And by the way, that the year-over-year, 3-month moving average basis that sounds so boring is just that, boring. We have had 5 months in a row where that number has been up 1.8%. And I think 10 of the last 15 reports have been up 1.8%. So I think these people say, oh, it's a volatile economy, all the ups and downs, what do I do? You look at the data on any reasonable basis, and we are steady state at about 1.8% employment growth.
To take out some of that noise, we're seeing not gangbusters, but pretty steady growth in employment. Vishnu, let's look underlying the top line and see what some of the drivers were. We mentioned in our preview report that healthcare was potentially an area of concern. It turned out to be stronger than expected. What was driving healthcare?
Well, everything in healthcare, every single category besides nursing homes drove good growth. And this runs counter to a lot of what political experts have been saying or some analysts have been saying. But it looks like the healthcare industry is starting to pick up steam. I have a healthcare staffer I cover called AMN Healthcare. They reported strong results last night. So looks like everything is starting to pick up. Demand has started to increase, and that was a big worry because over the recession, healthcare took a huge hit. And in combining that with the healthcare bill that was just passed, everyone was very hesitant to see what would happen. Looks like it's working out for the healthcare industry. Retail drove some good growth, seasonal effects there. Temporary labor put some good growth onto the number on top. So it looks like overall was a decent number.
Vishnu mentioned retail there, Bob. We know that retail hiring perhaps is happening a little bit earlier. Is it happening so early that the seasonal adjustment factors might make this a little bit rosier and we might give some of those jobs back because of statistical noise next month?
I think it may be kind of overstating the number by 10 or 20,000. But on the retail side of the house, I think that as we slide a little bit earlier each year and the seasonal adjustment factors are where they are, you tend to get a little bit of a boost from that. But on the other hand, my favorite set of numbers, the construction numbers, are way understated. I don't understand yet how the numbers are staying where they are. We have basically doubled the number of housing starts over the last 18 months. And what happened with employment is it's absolutely flat. And this month there was no gain in residential construction workers. That cannot be. It's not like a factory where you can crank things out with machines. You don't need any bodies. You need bodies, and they're not showing up in the report. So that means more revisions in the months ahead. And when we look back, the employment market is going to be even stronger than it looks today.
Vishnu, another statistic from this set of reports is the unemployment rate, and we saw that tick up a little bit to 7.9%. We mentioned in our preview video that this might happen. What was driving that? And we said that you shouldn't really freak out about that number. What's your take on that?
Well, it's not unusual to see the unemployment rate tick up after a large decrease in that rate, just for the fact that you have statistical noise, but also you have people coming back into the workforce. So when you break apart that number, the workforce itself grew, and the participation rate, the number of folks who are able to work that are looking for a job, increased above last month. So that will indicate that that rate should tick up, which, in all honesty, is probably a good thing, because that means that everyone's feeling more confident about the employment market.
And we mentioned that there were some trends in education that might explain maybe more folks seeing opportunity in the job market who would otherwise be going back to school?
Yes, the education market's been a pretty decent grower in terms of employment, and this month it was actually down. And I'm thinking some of that may be, if we relate it back to what Vishnu said about the participation rate, people that had gone back to school, maybe a few more are seeing opportunities in the market, maybe more of them have graduated now. That started at the beginning of the recession, but in any case, employment in the education field, that is in kind of the private sector type stuff, was down this month, which is highly unusual, and maybe and fits in a trend with what Vishnu is seeing on his side of the house.
And also another thing, Bob, that I know you look at is the hours worked and the wages, and those were flat to down a little bit.
Yeah.
What does that say to you?
Well, we had a big boost in the prior month, and this was kind of probably just a little bit of payback. Last numbers were kind of out of the blue, pretty strong, and now I think we kind of gave most of that back this month. Some of it looked like it was in the utility sector. I don't know what was going on there, but there was some odd things happening in that set of numbers. But given that, hours and dollars were down a little bit in almost all categories. I'd hoped maybe it was a mix issue, but it was not. It was kind of everything being just a little bit soft. And the other month was kind of inexplicably strong, but this month we gave a lot of it back.
Vishnu, you mentioned in our preview video that some things about productivity and that some companies will just have to hire more workers. So if we see them trying to do more with their same staff, we might see hours worked increase. We might see wages go up a little bit. If we see those moderate a bit, could that be because companies finally had to add more workers?
Could be. Could be reaching a ceiling as far as productivity out of each worker you have currently. When you take a look at the economy, it's growing moderately. Not robustly, but moderately. But when you take a look at hiring and expectations from businesses, that's been pretty disappointing, which indicates to me that if the consumer keeps on spending, if the economy keeps on growing, you will eventually need to hire folks because you've maxed out pretty much what you have on staff right now as far as what they can physically, mentally do for you on a consistent basis.
Last question, Hurricane Sandy, obviously still cleanup efforts going on from that and a lot of disruption on the eastern part of the United States. How might this affect future employment reports? It's not captured in this report at all because of when the storm hit.
Yes.
What might happen in the future, though?
Yeah, they measure in the middle of the month, so the effects from Sandy will be there. And where it'll particularly show up is people that have businesses, and those businesses are shut down and people can't go to work. And that will have a negative effect on the report. Eventually, all the rebuilding efforts and so forth will add people to the employment rolls, and as those businesses reopen, will look a little better. But we may take a one-time hit, or maybe even a two-month hit in October and November, where people can't even literally get to their job or have a place to go to a job.
All right, well, I know we'll examine those results when we get them in the next couple of months, but thanks for joining me today with your insights on the October job report. And again, congratulations on calling that above consensus number.
Thank you.
Thank you.
I'm Jason Sipp from Morningstar. Thanks for watching.